From markets and mergers to baseball and Beyonce, legendary value investor Mario Gabelli is in it all, and he joins us now ahead of his Value Investor Conference that runs right before Berkshire Hathaway's annual meeting next week. Mario Gabelli, Chairman and CEO of GAMCO Investors, thanks so much for coming in.
Well, it's terrific. It's exciting to talk about my favorite subject.
Yeah, what, the market?
Maybe.
Well,
baseball, no.
Baseball, okay. We'll get to baseball. Let's start really high. We're going to take the bird's eye view of the market here. We ended a little bit lower today, but we all know we are basically back at all-time highs. The NASDAQ today crossed over its intraday record. What do you make of this comeback from December 24th? Are you surprised that it has been this fast?
Well, the market discounts the future. So if I'm running for election in 2020, I want to have a very strong economy in the spring. And so you orchestrate the nice with China for the second half of this year. You want to get Nancy Pelosi to help me out with infrastructure bill. And so the market is discounting some of that. The second part, which is fairly obvious, is the 4 T's. The tariffs we just chatted about. The second one is the notion of 10-year bond is 252 this morning or this afternoon. At that time when you talked about it, at the middle of October, it was 323. And so the present value of the future stream of earnings, it helps the multiple. So the notion of the Fed accommodating or being less visible in terms of stepping on a brake was an element, but that was not unanticipated. I'm in the camp that says we're at 3% on the 10 by the end of the year. I'll get back to that. But the most important part is that most analysts don't understand taxes. Most observers don't understand taxes. They don't understand that you get 100% write-off from September 27th of 2017 on any equipment you buy. They don't understand the fact that we've gone to territorial versus global, which is very fundamental. It means that businesses look on the United States as a good place to be. The rate coming down is important. Yep. And so when you look at quarterly earnings, they're totally confused, even at the Q1, because of beat, guilty, and the other things that you look at on non-U.S. Finally, technology.
Yeah, I mean, it's been
that
huge.
helps the multiple. So bottom line, Jen, I think the market is discounting a lot of that. We will hopefully see a lot more in the future, but it doesn't matter from my point of view. I've been in this business for 50 years, and the next 50 years you'll have up and down markets. Yeah. When you and I are here in the year 2020 is now, but 2,100, the Dow will be, like Buffett says, over 100,000. So what are you worried about a little ripple?
2,100.
2,100.
Am I going to be
We're
here?
Going to be here.
I don't know.
We look different?
Maybe.
No.
Yeah. This beautiful set will still be here.
You will eat organic and natural food. You'll.
Fine.
And every company is a tech company.
Yes, exactly. Mario, I want to ask you about some of the.
You'll be replaced by a robot.
Yeah. Pretty soon.
Yes, they already have those in China. I want to ask you about some of the IPOs we've seen come to market, and also the deal news. You know, I look at your Twitter feed, and you're calling out a lot of the mergers that are happening. We see the news with Anadarko today. We've seen the first big bank merger in a decade. What are some of these events, like as you say, corporate financing events, say to you?
IPOs are very important. Clayton, who runs the SEC, understands the notion that there are real structural impediments to companies going public. Thinking about the PE firms and the venture capital firms financing unicorns. Why go public? Because you got sections of the Sarbanes-Act. It is burdensome. On the other side, you have public offerings. You saw a lift. Instead of pricing at the initial low range, they priced it at 72. It jumped to 77 and back to 58. So you're going to have that. I bought Facebook when I think it went from X to Y. I bought Ferrari when it went from $52 down to 35. It's 130 today. What are the fundamentals? What's the cash flow going to look like? Do I want to buy it at the IPO? Do I want to be a flipper? A flipper is someone that, you know what it is.
Yeah.
So that's part A. And that's how we think about it. It is very good for an analyst to start reading the public materials. Okay? We are sending someone over to a company that is starting up Starbucks-type coffees in China.
Yeah. Luckin.
Mm-hmm.
And so, you know, you've got to read that. It's really a great source of knowledge, which is terrific. So that's on the IPOs. But on the...
Well, on the deals, I mean, what does it say to you about the market cycle? Because we continue not just to see deals, but then companies trying to come over the top, and other companies say they didn't even call us.
Well, first of all, with regards to that, we have a philosophy that if we own shares of a company, we own over 5% of 120 companies we file 13 Ds on. But the point is, if a company is approached, we think it is important on the public world to make that announcement. For example, we own the shares of a company called KAMAN. The symbol is KMN. We own about, 15% of it. There's 28 million shares. Bloomberg a story that said, in effect, they're going to split the company. Well, we've tried to get them to acknowledge that, and they won't talk about it. So somebody's hearing about it, okay? And that's not fair. And so the regulators or someone should say, hey, in the public markets, this is a story, you got to comment on it.
More of a European style.
Well, with all M&A talks, you're supposed to announce. I mean, even as soon as conversations are happening.
Well, on the other side, when you talk about Oxy and Anadarko has a play in the Delaware Basin. We own a stock, fortunately. But independent of that, when Chevron knocked on the door, there was speculation that Oxy was preparing. So this was not a surprise. $76, half cash, half paper. But the point is that if you are studying financial engineering and understand how to make love in the corporate world, you basically understand the notion that you got to know what's going on. And this is a terrific learning curve.
Mario, you are such a longtime media investor and believer in big media. While we have you here, we have been talking the streaming wars to death. That's one thing that really interests me lately. I mean, you've got Netflix, you've got CBS trying all access, HBO now with AT&T, so we know that AT&T is going to offer some kind of three-tiered Warner Media package. I'd love to hear just like a lightning round from you in terms of your view on each of these companies and which one to really believe in the long run. Hulu's in there, Amazon's in there.
No, but I wrote a report in 1975. No matter where you are, however you get the content on whatever device, give to the consumer what they want at a low price, wherever they want on whatever device, and content is king. So you have to be able to sell something. And what the consumer does is bypass a channel of distribution, much the way like Bezos did in Amazon, and that's what Hastings has done in Netflix. They've early mover advantage, low price. I can get 3 households for $14. That's pretty good. And Disney has got scale and they got critical mass, and with the Fox content and library, it'll take time. Most Americans think about the United States. Well, yeah, we've got 350 million people, but there's 7 billion more in the world, and smartphones make it easy. So think globally. So what do I like on a global basis? Who's putting in content that has to be in real time? Sports, news, and some libraries. And so I'm a big fan. I think Disney will do quite well over the next 10 years. I don't know who's going to run it. Netflix is going to be a challenge to overcome. They're putting $10 billion, $11 billion into the R&D, artist repertoire, the screens and so on. And they don't have the library, but that could be changed.
Let's drill down on a couple of these. So,
go for it.
Yeah, but I want to start with CBS and Viacom. Back in September, you were quoted as saying that everyone should be going out and buying CBS. Do you still think that CBS is a good buy here? Do you think these companies are coming together?
It doesn't matter. Look, I followed CBS in 1967. They spun off Viacom. It was called Viacom in 1972 or 3. Some to put it back together, some to split it up. It makes sense to have scale and go global. CBS has not done a good job as Bacchus has done, that's Viacom, in the global marketplace. Both of them need to have each other. But more importantly, I've always said one thing. He who has the gold rules, and National Amusement, Sherry Redstone, controls both. What they announced today was Joe Iannello is going to get his contract extended. I think he's done a great job. He understands the playbook that Les Munvas had given him and that he created, and he's executing on that. Bob Bacchus is doing a fantastic job at Viacom. So it's a question of what are the terms of trade? What's the dowry? Who's going to... Yep. But putting them together is logical. And while they're doing that, who's going to maybe come over the top and bid on one or two of those?
So you think they're
I would
both
buy
good?
CBS and I'd buy Viacom. And we own, we're the largest holder of the voting stock, and the family, National Amusements, yesterday we got information they filed to convert some of their voting stock to lower voting stock. So you'll see that we increased our voting percentage without buying any.
Mm-hmm. Now, when you mentioned taxes earlier, my mind went immediately to John Malone, someone that you have invested in for a while. That makes me think of the Liberty Braves Group. BATRA is the ticker there. That kind of goes to that kind of goes to the idea of content and the value of that content. What do you see with that specific play? Is it the value of the team, or is it the regional sport right?
Okay, first of all, I think baseball is terrific. Secondly, it's a national sport. Third, any grandparent wants to buy one for their grandchild. You want to own one for your girlfriend or your boyfriend, buy them a baseball team. It's the only one that's public. For $28, you can buy one share of the Braves. Last year, their record was 90-72. The prior year was 72-90. They got an exciting product. Malone will look at some way to monetize that in the next 3 years. So I think you go from $28 to $40 3 or 4 years from now, and it's okay. And it's a fun thing to hold. You look up the standings. Will they beat the Mets? Will they beat the Phillies? And you get passion. So you don't want passion?
Bullish on baseball.
So
No, I'm bullish on practical live events that millennials like. I like entertainment. I like streaming music. I like the individuals that own the content. Okay, that's why we bought Live Nation at $10 and it's $65. That doesn't mean I'm buying it here, but I'm saying that's why we did. Now, who's got the labels? Who's got the copyright? And then what do you do with this whole arm wrestling over? Do I take a movie and I give it a shot at the Academy Award if they take and show it in Hollywood for 7 days?
Just talking about that debate today, yeah.
You know that. And, Scheinberg, go ahead. So what's the question?
Well, no, I mean, local concern, MSG, right? Like the company, I mean, I guess the question is, product stinks, right? Knicks are terrible.
No.
Does that matter?
Slow down. You got it totally wrong. The Knicks won first place by losing the most games. They have the shot at a 15 to 20% probability of getting a talent from Duke, though that's
the accidental tank.
It is what it is. So the stock, they've announced they're spinning it off. The Form 10 is in preliminary. We don't know where it is. MSG is trading at $304 a share today. There's 24 million shares. But you have pictures around you. Between Macy's and the Hudson Yards is one of the hottest spots in the country. Reno, Nevada, Nashville, and that area. They own the air rights. That's a lot of money that people don't know how to calculate. And we got to live with my buddy Jimmy Dolan.
Yep.
We have this nice graphic we're showing of your hotspots.
Yeah, we have a chart. We're going to get into more of this with Mario Gabelli. These are his hotspots. How to trade Mario Gabelli's hotspots, what he likes. More on the market coming up right after this.